Welcome to our market analysis on the AI investment surge. Today, we're looking at how two giants, Alibaba and Micron, are driving tech futures higher with market data from September 2025. U.S. equity futures climbed this morning as renewed confidence in AI investments propelled tech stocks higher, with Alibaba Group Holding Ltd. And Micron Technology Inc. leading the charge. The Nasdaq 100 futures were up 0.3%, the S&P 500 futures were up 0.1%, and the Dow Jones futures were flat. Alibaba's stock surged by 9%. This enthusiasm comes after a previous session's tech sell-off and a streak of record market highs. Investors are now focusing on companies with direct AI exposure, driving selective gains in the tech sector. Alibaba's AI ambitions are clear. Their shares surged 9% in Hong Kong trading after CEO Eddie Wu announced the company would increase its AI infrastructure spending beyond an initial $53 billion target over the next 3 years. The company unveiled its Qwen 3 Max AI model, which has over 1 trillion parameters and is the most advanced AI model in its portfolio. Alibaba is positioning itself as a full-stack AI service provider and a direct competitor to OpenAI and Google. They also have plans for global expansion, with new international data centers planned for Brazil, France, and the Netherlands. As CEO Eddie Wu stated, the pace of development in the industry has far surpassed our expectations, and the demand for AI infrastructure has also exceeded our forecasts. We predict global AI spending will exceed $4 trillion over the next 5 years. Micron Technology also added to the AI optimism with better-than-expected fourth-quarter earnings, driven by surging demand for AI data center applications. The company reported earnings per share of $3.03, which was 5.9% above Wall Street estimates, and revenue of $11.32 billion, up 2.0% from estimates. Cloud memory revenue showed a strong performance at $4.5 billion, a 7.1% increase over estimates, and they forecasted Q1 2026 revenue to be $12.5 billion, a 4.2% increase from estimates. Micron also saw 5x AI memory revenue growth, $10 billion in AI product revenue in FY 2025, and record cloud memory performance. This AI enthusiasm comes as investors navigate mixed signals from Federal Reserve officials about future interest rate cuts. The Fed recently cut its rate by 0.25 points to 4.25%, which was the first reduction since December 2024. And there's a 94% probability of another cut in October. However, Fed Chairman Powell has maintained a cautious stance, noting that risks remain for both employment and inflation, and describing the situation as challenging. The broader AI infrastructure investment boom continues to drive market sentiment. Estimates suggest that total spending could reach $3 to $4 trillion by 2030. This massive capital deployment has helped propel technology stocks to repeated record highs throughout 2025, even as traditional economic indicators show mixed signals. The AI infrastructure boom represents a fundamental shift in how markets value technology companies, with a premium placed on those with direct exposure to AI development and deployment.